Hello everyone, hey, hope you're having a great day. Ed Fontes here. Hey, where are you getting your information from? We got the crystal ball here, folks. We know what's happening. Where are you getting your crystal ball information from? Why? Because Fannie Mae just came out. You know Fannie Mae, right? They said that 80% of people believe you need 20% down or more to purchase a home. What crystal ball are you listening to? Where are you getting this information? That's what I want to know, because Fannie Mae's report, they gave out and they broke it down little by little, but majority, 80% of the people stated they need 20% down or more. Now, here's a couple categories. 3% of people said you need 0 down. That's true, partially true. 17% said you need 1 to 5% down. 20% said you need 6 to 10% down. And 3% said you need 11 to 19% down. And then they said 80% think you need 20% down. Wow, what a report. So let's get the record straight here. What crystal ball are you listening to, right? Down payment depends upon your FICO score and your back-end ratios. Back-end ratios are principal, interest, tax, and insurance, plus your credit, debt, auto loans, divided by your gross monthly income. There's no secrets, and I always say numbers do not lie. So let's get the ball rolling here. 100% financing is still out there. Bond programs, GSFA, things of that nature. Now, the thing about that is they're a lot more stricter on their guidelines. You are required to have a minimum FICO score of 640. Some programs require a minimum FICO score of 660. Some require a minimum FICO score of 680. So check with us on what program you can qualify for, folks. Now, they are a little stricter, like I said. On this program, 45% back-end ratio. Principal, interest, tax, insurance, credit, debt divided by gross monthly income cannot exceed 45%. They're really strict on that. So what are the programs do we have available out there? Well, conventional, Fannie Mae, Freddie Mac. As long as you've got the right FICO score, you can qualify with as little as 3% down. You know, conventional financing is usually the standard 3, 5, 10, whatever, 6%, 7%. 20% down, that's usually the program that a lot of people use when they're purchasing a home. Now, remember also, FHA is still and has been for years 3.5% down. Now, FHA is a little more lenient. As a lender, we go higher on our back-end ratios with FHA. Call us to find out where you fit. Because to this day, 30% of our business is still turn downs from banks and other lenders of people who exceed their minimum guidelines, not ours. We abide by the minimum guidelines of FHA, Fannie Mae, and Freddie Mac. All right? We do not have any bank overlays. And overlays are basically add-ons and additional strict guidelines that other lenders put on. We don't do that, folks. So we also have, last but not least, the true 100% financing for our veterans, a VA loan. To all our veterans out there, thank you for your service. I'm a veteran. I know how this program works like the back of my hand. Now, this is the true 100% financing with no mortgage insurance monthly. Folks, the true benefit to our veterans. Now, all the other programs, you put less than 20% down, even on FHA, doesn't matter. You're going to have monthly mortgage insurance added to your loan, folks. Okay? And your monthly mortgage insurance is going to depend on where your FICO score is at, except for FHA. Now, so now that you know what down payment programs are available, where can you get your down payment from? We've had a lot of clients that save their money, had the ability to save, put away, and come up with their down payment. We've had other clients that had retirement accounts, 401ks, IRAs. They borrowed off of their retirement accounts. A great opportunity. You pay yourself back, so you're earning more interest on the money you pay back, and we don't ding you for it, folks. You're not dinged for that monthly amount that you're paying yourself back. Some people can, and I don't know, depend on your retirement program. Get with your HR. Find out, hey, how much can I borrow, or what can I use? How much can I get out of my 401k account, right? We've got a lot of clients doing that. Sale of assets. We have a lot of clients selling their boats, their motorhomes, their cars, motorcycles to get into a home. They're that serious. Are you that serious? Last but not least, we also have gift funds from family members, parents. Parents are borrowing off their 401ks as well to help their children get into a home now because of affordability, interest rates, Depending on if you've got a great FICO scores and decent credit, what you must if you have good FICO scores. I mean, the interest rates are in the threes, folks. Unbelievable. Unbelievable. My first interest rate was 16.5% adjustable that can go to 21% the next month. In 1981, our interest rate, 30-year fixed, was at 18.5%. Man, we're spoiled. Go look it up, folks. 1981, 18.5% 30-year fixed. Can you believe that? And look where we're at. We're in the threes. Wow. Incredible. And we still got along back then, right? So you guys are spoiled is what I say. All right. So with that said, what crystal ball are you looking for? Where are you getting your information from? Because those of you that continue to say, oh, Ed, we're going to wait until interest rates come down. We're going to wait until prices come down. We're going to wait until we have a recession. What crystal ball are you listening to, folks? Or whose crystal ball are you listening to? According to Wall Street Journal, according to the CFOs that were interviewed by Duke University, and according to the Natural Business of Economics, they have all stated that if we're going to have a recession, our GDP has to drop 2 quarters in a year. 2 consecutive quarters, folks. That ain't happening. There's no even sign of that happening, folks. And that's what I'm saying. What crystal ball are you listening to? Because these are the experts that are talking. Yeah, we might have a low appreciation. They're talking about going to 3.5% to 4% appreciation year after year for the next 4 to 5 years. But heck, that's back to normalcy. We've had some areas 7%, 6%. We've had some areas locally, and I'm sure you know this, and the 10, 15, 20% appreciation, folks, in the last 2 years. Heck, we've had clients that refinance. A lady 2 years ago purchased her home through us. We just refinanced her. She has $150,000 equity. In 2 years, folks, there's no way. She says, Ed, there's no way I would have saved that amount of money in 2-year period. Exactly. That's what we're talking about. So it's time to jump off the fence. Here's a study by Framework, folks. They're saying, and let's see if you're in this category, 41% of the people feel very well prepared to purchase a home now. Yes, 41% of you think you're ready to buy a home. So get off the fence and let's do it, right? Now, 57%, get this, feel that they can't afford a home. Let me tell you a story, folks. We just closed a transaction last week with the couple that were crying at the signing. Their rent payment in their apartment was going up to $1,450 a month. They were going up to $150, $1,450 a month in their rent payment. They just closed on their transaction on their home last week. Their house payment is $1,528 a month. That includes principal, interest, tax, and insurance, everything. And the bottom line is, folks, is you got to understand, you get the write-off. That's probably not the full payment for the return you get for writing off your property taxes and your interest. You need to be like that couple. Unbelievable. They were fed up. They were fed up and got mad, and that's what made them jump and come in. Okay, let's get this thing, you get mad enough, you're going to do something, right? But it doesn't take that. Come on in and let's figure it out where you stand and qualify. We've had clients that we've closed transactions that we've worked with in a year, 6 months, 2 years. And one of our videos that we've shown before, 2.5 years for a client until they were able to qualify to get in their home. Yeah, some people have bad circumstances. It's not all that bad. Let's get you off the fence. Time to jump off the fence. So, the bottom line is, also, 47% think the home buying process is rigged against the buyer. What crystal ball are you listening to if you're rigged against the buyer? Where do you get this information from that you think that I just don't understand. I can't comprehend how 47% think that buying a home is rigged. The system's rigged. Come on, folks. It's easy if you think it is. If you think you can, you can. If you think you can't, then you've got a problem, right? So 44% fear of making costly mistakes. We will not allow you to make a costly mistake. Like back in the old days, we had people that were given these types of loans that we knew wouldn't work for certain people. I didn't give those loans out, but guess what happened? Clients that I told them they didn't qualify for that program because they wanted it, ended up taking that program from somebody else, another lender that was willing to take their money. 3 years later, these clients same clients, come back and say, can you help us, Ed? I can't help you. You got into a loan that you should have never been into. We're not going to allow you to make that costly mistake, folks. We're not going to allow that to happen. And let's face it, 55% of the people said they could use a coach to help them through the home buying process. I'm your coach, Coach Ed Fontes. I'm here to help you. We coach people to, like I said before, work with you 6 months, a year, 8 months, 2 years. The one client, 2.5 years, folks. We're here to help you, coach you. If you can't get approved today, we're going to tell you what you need to do in order to get approved. 55% want a coach. We're here for you. We'll be your coach. Me and my team will be your coach, folks. We'll help you get into it. Hey, and besides that, once we get you pre-approved, I'm talking about an underwriter disposition, pre-approved, not pre-qualified. There's a difference. We work with several top real estate professionals, folks, up and down this area. And we can help you, and in other states as well. We can refer and recommend to you a top real estate professional that will represent you professionally, folks. Get with us. Give us a call, 916-712-8509. Listen to Ed's Crystal Ball, folks. Hey, by the way, get the book, The Ultimate Guide to Finding the Perfect Home Loan from Ed Fontes. Yours truly, folks. Numbers don't lie. This is from pure experience. This is educational information for those that want to understand the home buying process, the home loan process, folks. I have realtors that are purchasing this book for their clients for educational purposes to inform them. Even if you don't utilize my services, get the book, Amazon.com. The Ultimate Guide to Finding the Perfect Home Loan. Thank you. Be blessed. Please share this with anybody that you know that needs this information. Be blessed. Have a great day. Talk to you soon.